how I thought of the space, and one of the reasons I set up XPAM was, I just put it really simple terms. The space today is $2 trillion. I think it's going to $100 trillion. That's just the extrapolation of market cap or the log regression channel of the price of Bitcoin. You can kind of back it out in a number of different ways.
Raoul Pal and Tushar Jain delve further into the future of cryptocurrencies in an insightful discussion, imagining a $100 trillion market by 2032. Highlighting the unrealized promise of low-float tokens and the revolutionary potential of blockchain in transforming economic design and wealth generation, beyond the usual suspects like Bitcoin and Ethereum in an interview with Pal. Tushar Jain highlights how blockchain technology may be used to coordinate token economic design and value capture, with a particular emphasis on productive assets like DeFi and Solana. In order to take advantage of this boom, Raoul projected that the cryptocurrency industry will grow from $2 trillion to $100 trillion by 2032. He cited hedge funds' capacity to identify alpha and control risk as evidence. Pal brought out the fact that hedge funds must prioritize risk-adjusted returns because they have cash on hand. Additionally, he discussed network effects and the behavioral economics of token value, suggesting that these topics are currently poorly understood. Low-float tokens were seen by Raoul as an opportunity, noting known reduced prices and supply that offer an unbalanced risk-reward beyond Bitcoin. He sees tremendous development with the potential to create value worth at least $50 trillion.
I've been thinking through these low-float tokens, and one thing that I think, firstly, is now the market discounts them, so therefore you get a good shot in the liquid markets to make a decision, because the decision I think you've got to make is the supply is known. So that's off the table. Yeah, in typical markets, unknown supply, unknown demand, that's complicated. Known demand, not known supply, you can model something, and the reverse side. So I look at these and I know what the supply is going to be, because we've now got the unlocks. The tokens have been discounted because low supply. And then what you know is, well, if demand does come, the beta of a low float is gigantic. And I think it's going to crush everybody's understanding of what low float means in this bull market, and they'll all be wrong. And they'll be wrong because limited float, but good demand, because some of these are really great projects, will create really asymmetric risk rewards. I don't think anybody understands this, because they think future token unlocks always mean the price under pressure. Yeah, in a bear market, they'll probably go down more than others. But in a bull market phase with a very small float, I think this is very interesting. And I guess they're all going to outperform.
I partially agree. I think what you're saying is true for a good number of high-quality projects.
Yeah.
But I think we're going to see...
That's the caveat. These are ones that actually get demand because they build network effects and adoption, stuff like that. If they don't, then no, it's going to shit.
Yeah, there's a lot of tokens that are out there that I would say are basically memes, and maybe not explicitly or deliberately, but that's how they trade.
Yeah.
And I think we are finally entering the level of market maturity in crypto where we see a huge dispersion in returns based on asset quality. In the past, you look at the 2017 bull market, I mean, I remember like everything ripped, right? It didn't matter what it was or if it was useful. I remember in December 2017, if you owned any alts, you were just waiting for your number to get called. And, that was a day that you should sell because the thing was up 200% in a day for no reason. I remember in 2021. Can we
have those days back again, please?
And then in 2021, it was kind of similar too, right? Like you own some NFTs or you own some, other high beta asset, and you just waited for the day that your number was called, and you saw the thing rip up 200% in a day, and you're like, oh my God, this is amazing. I must be a genius. As much as we may want those days back, I don't think they're coming back. I think we're going to see much more sophistication and much more pickiness from public market allocators in crypto. I don't think they're going to be indiscriminately bidding across the board.
But I'm going to see how my thesis gets tested. But my guess is the ones that win, the early stage ones that win this cycle of the quality projects, like Solana was last time or ETH was the time before, will all be low float. Maybe there's one that isn't, but it's just very hard to beat a low float. Because I've seen this in markets themselves, in traditional markets. You've got low float equity. You bring in one large buyer, it goes bananas. So how do you think about, you said when your number comes up, how do you think about the cycle? Do you think about the cycle? Do you trade accordingly? How do you exit positions and how do you enter positions? Because these are things that people get wrong.
Ethereum continues to lead the cryptocurrency world in terms of development activity, with 180,000 events, much exceeding the second-ranked project, BNB Chain, which has just 99,100 events, despite a 0.6% decline last month. This high degree of development activity usually indicates that technology is advancing and that Ethereum is being updated and expanded. Because the majority of big holders are staking platforms that allow investors to contribute to mainnet security while earning incentives, Ethereum is one of the most centralized cryptocurrencies, with 44% of its supply in 10 key wallets. In addition to Ethereum exchange-traded funds, increased staking activity reduces supply pressure and can raise prices during times of high demand. With $1.7 million in withdrawals, ETFs have returned to negative flows, a sign that investors are becoming more cautious in taking money out.
I do use the cycle, but really for entries, and then tend to just hold over longer time periods and maybe switch assets in between. But how do you think about it?
I know that I'm not a trader. I know that I'm not going to be able to time market bottoms and market tops. I've talked to a lot of other investors, managers, and I ask them, do you have a systematic strategy for timing market cycles? And almost always they say no. All right. Then I ask them, do you think discretionarily you can outperform by just making a discretionary decision about this is a market top or bottom? And they usually say no. And so I'm like, okay, well, you can't do it systematically and you can't do it discretionarily. So why are you doing it? And the reason why a lot of people do it is they want to dampen volatility. They think that, that is a good in and of itself, which is fair, right? Like people have different preferences, but if you're worried about dampening volatility, I think just lower your bet size is actually a much cleaner way to express that. Because when you try to trade beta, the worst thing that can happen to you is you get whipsawed, where you're like, oh, this is up, 3x. I think it's fantastic. I'm going to sell. You sell it. It goes up another 10x from there. And you're like, oh my God, I'm missing out. I need to be back in. You buy back in, and that was the top. And that is such a common market pattern for people who try to time tops and bottoms that, I suffered that pain, and I was like, I'm never doing that again. I don't want to feel that pain again. So the way that I think about it is, our objective is to outperform across market cycles, not within a market cycle. And whenever we have an investor, like I think of it as, we'll put the money into Bitcoin and then we are underwriting other investments in Bitcoin terms from there. So that's what we think of as the bellwether that we want to outperform. And if we want to buy something, we have to think it's going to do better than Bitcoin over some time horizon. And then when will we exit it? We'll exit when, it's either three things. One of three things has happened. Either one, the thesis has fully played out, or two, the market has gotten irrational and now overvalues it, or three, we like something else better. And so, this still might have a lot of potential, but like this new thing just came across and like, I love it so much. I want to put, more capital in that direction. So those are three reasons why we would sell.
How I thought of the space, and one of the reasons I set up XPAM was, I just put it really simple terms. The space today is $2 trillion. I think it's going to $100 trillion. That's just the extrapolation of market cap or the log regression channel of the price of Bitcoin. You can kind of back it out in a number of different ways. And maybe I'm an idiot, wrong by 50%. It goes to 50 trillion by 2032, 2034, something like that. And so the job, therefore, is to ride that trend. It's not, because one thing that people don't understand is it will not be a $50 trillion Bitcoin world. Bitcoin might be 10 trillion. Well, there's going to be 40 or 90 trillion of value created somewhere else. And that's what hedge funds can do. because that's a hard job. You need to be super focused to think, where is the really big value accrual? Like you did with Solana. Classic example is you see something really early stage and the value accrual has been vast from that and it's not over. And that's what I think the bigger opportunity. If people zoom out, stop worrying about the cycles as much and just think, how do I capture that trend? Because I think that is the largest, fastest accumulation of wealth in all human history if that plays out.
100% agreed.
Additionally, Vitalik Buterin, a co-founder of Ethereum, may have lowered the value of his company from $325,000 to $240,000, or about $592 million. Tech Alabama Ethereum may drop below the $2,000 to $2,300 price level after breaking below a significant trend line. In the past, Ethereum has experienced significant rallies after similar declines. Ethereum's resistance levels range from $2,817 to $3,542. As open interest in the futures markets decreases, a successful advance above these levels could lead to additional increase. In conclusion, do you prefer investing in Bitcoin for long-term value or diversifying into other blockchains like Solana or Ethereum? Please share this video and hit the like button. The OI has dropped 5% in the last day to 10.39 billion, indicating that traders are becoming more cautious, especially in the wake of the August 5th meltdown. Thank you for watching and please remember to subscribe.